I'm very excited for the episode today because I have my good friend Anne with me.
My name is Anne. I own Anne Adams and Associates Realty. I've been in business a little over 20 years.
The wealth of information, whenever I call Anne or Mike, I get so much of knowledge.
Yeah, both Mike and I love Kiran. He's awesome.
Do credit unions give better rates?
You could actually breach your own contract, not close on time, and lose a house.
What kind of hidden costs can be there associated with a mortgage?
Be able to pick the best lender, just like that. Lending institution with the good reputation that they can close on time. His number is like top of the list. If the person is on a job visa, or if they are on a W-2, or if they are self-employed, if their credit score is excellent, so then we send them to like premium.
Talking about the lower interest rates, do credit unions give better rates, or how is it? Like, are they the same level as like big banks?
It is like this, right? My opinion is, see, every financial institution has their own rate sheet. And every financial institution, being the capitalistic market it is, they all want to be competitive to each other. There is nothing like credit union is good or Wells Fargo is worse or Chase is better. I like mortgage brokers. I mean, not because I'm a mortgage broker, but I like mortgage brokers because these brokers are signed up with everybody, including credit unions. And then these mortgage brokers can shop for the rate. At any given point of time, like there is a sale on a particular loan program. Then the mortgage brokers immediately gravitate to that loan program. If there is a special going on with a certain bank for a certain kind of a product, then we gravitate towards that and offer it to the buyer. So as a consumer, your better bet is either you go to each bank and figure out what their special is for that month that you are trying to buy. Go to credit union, go to Wells Fargo, go to Chase, go to this, go to the website. There are like 10,000 websites. You can go to each one and try to figure it out, or talk to a mortgage broker who will be able to give you the options, especially if the mortgage brokers who are busy, who are doing loans, they know where the specials are. There is nothing like credit union has a special. It's like asking, is it cheaper to buy in Best Buy or Amazon? It's like we don't know. Like sometimes it's cheaper in Amazon, sometimes it's cheaper in Best Buy. That's why if you use a mortgage broker, they'll be able to shop it for you and it doesn't cost you a thing. Right, Anne? What do you think?
I think also you have to really depend on the person that you choose more than anything. I don't feel like there's such a significant difference between one vendor and the next. You have to pick the person that's going to provide you with the best service, because this is the biggest financial decision of your life. You need somebody trustworthy, you need somebody that returns your calls, and you need somebody knowledgeable. So sometimes in your community, I see customers shop to the bitter end, and it's a little risky to do that because, first of all, you may not close on time. If you don't make a decision and decide to become loyal and committed to your lender, you could actually breach your own contract, not close on time, and lose a house. And so people that almost overshop on this aspect of the transaction are really shooting themselves in the foot. I mean, A or B doesn't matter as much as the person that provides you with the service. Quality really matters. And I really believe that. I've seen people, you're looking for that quarter point and you're overlooking the person that has the most knowledge that gets you to the finish line, gets you the home that you want, instead of breaching contract, losing your earnest money, and all those other variables that could be a total risk for you in trying to obtain your home.
And also there is so many loan programs and the subtleties. We talked about having your team, right? Your team for the biggest investment in your life. It's not like you're going to get a haircut, or it's not like you're going to buy a car or something. Even car is bigger, but home is the biggest. So for that, you need to establish pillars. You need to have the right real estate agent that you can trust and that you believe that who can advise you in your favor, right? That's number one, the pillar number one. Pillar number two is you need to have a mortgage broker who can advise you on the right loan program for you, because even though there is a lot of teaser rates that we talked about, right? Rates are low sometimes, then later on after 2 years it adjusts up. So you don't know, as a buyer, you don't know, and you're shopping like crazy on the rates, and it might not really give you.
Or it's really easy to hide facts to you. So maybe the rate looks very low, but then they're charging you points over here. So that can be very confusing for buyers, and they're actually getting a worse deal with a lower rate in that scenario. Another thing, when he talks about advisors, that I would tell people, quality matters, is you're looking for a home inspector, and one home inspector costs $75 more than the first one you talk to. Well, what's the quality of that person? Again, this is the biggest financial decision of your life, is $75, and then you get someone that misses something very big on the home that may have caused you not to want to buy that home, may have been a huge expense down the road. So quality advisors are just imperative during this transaction.
So the short summary, Sunil, is credit unions, it's a myth that credit unions have great rates. They do have great rates for auto, things like that.
Yeah, that's the reason I was asking that.
Correct. For auto, typically they run it because that's their, they want people to come to the bank, open the account. That's why they offer these teaser rates for auto.
Oh, okay.
Yeah.
But then when it comes to the mortgages, they just compete in an open market.
Okay. One more follow-up question. So, like Anne mentioned about it. What kind of hidden costs can be there associated with a mortgage? Like, if this is something your mortgage broker will mention to you, he'll go over all the details, or if there are any practices that you might have observed where the private institutions, they'll not mention those, or it will be a very subtle thing in the documentation and people discover it by chance. Are there any things like that?
There are so many things like that. It happened to me also. If somebody is watching the YouTube channel, educating themselves on this, then they'll be a smarter shopper when it comes to mortgages. But people are ignorant and they don't make time to shop properly. Let's say hypothetically, I gave somebody a rate of 5.25%. Then they call me back and say, you know what, somebody is offering me 4.75. Can you match the 4.75? They'll say. Then immediately I'll say, I'll match the 4.75. That's it, done, right? But then for 4.75, what it entails is there need to be some either discount points, or there is an origination fee, or there is some other junk fee. We call it junk fee. That's the real legal name for it. We call it junk fee. There is some junk fee we can just tag along. That way the borrower might not even notice it. So, or there is some kind of a condition on the loan that you can add to it. That way the loan level pricing is totally hidden to the borrower. So it's like penny wise, pound foolish. You have to trust the professional, and then you have to convey your reservations. Hey, I'm getting this low rate. Then I explain to them, I can give you 4 points. I can give you not 4.75. I can give you 3.75. But this is what it takes. And then they realize, oh, that guy is charging.
They're charging in different places.
In different places. Rocket Mortgage is a prime example. I know they are big, they are into marketing and all that, but there is Rocket Wholesale, then there is Rocket Retail, there is a lot of differences. Rocket Retail is notorious to charge lot of points and they offer low rate. So people fall for it. Even very sophisticated buyers, they fall for it. They'll say, oh, they are giving me 3.75, they just go with them. Then realizing that they are charging so much in points over a period of time.
You're paying for it somewhere. I feel like most lenders are very similar. And so that's why you just choose the quality person that you can trust, because if somebody has a lower rate, there's something behind it. And you can discover that by requesting a good faith estimate. The good faith estimate will outline the different fees involved, or it should. Sometimes it's hard for a consumer that doesn't really understand what they're reading, but
yes, I mean, it could be as subtle as you change the closing date. Like sometimes some borrowers look at the cash to close. Okay, how much cash or the closing cost total, right? So if I estimate the insurance the borrower has shopped or not shopped. Let's say they shop it and it's $1,000 insurance, right? So in the estimate, they'll put it as $250 because it's an estimate and it clearly says third party estimate. I put $250. And then if I put $1,000 and if that guy puts $250, which is an estimate, he's not lying. I'm not saying that guy is lying. But when you look at the cash to close, his will be
less,
$750 cheaper. Then you might be thinking, oh, it's $750 cheaper. Then he's going to add that at the end. You will be like, oh my God, I should have listened to Kiran on this. So it happens a lot like that.
So what are some of the things that a mortgage broker has access to when they are comparing, say, 50 institutions? Say I reach out to you. You will be checking 50 institutions or 50 different loan deals and comparing which one is better for me.
Yeah.
What are some of the things that you look at when you compare those 50 offers from the banks?
The best value, right? The best value for your credit score and how long you want to live in the property.
Okay.
And we do have access to tools like Loan Sifter is an example. It's a paid program. You just plug in the borrower's information and the tool just gives me a list of all the lenders and it lists by the rate and the cost. So I'll be able to pick the best lender just like that.
Oh, okay.
Yeah.
So like common public doesn't have access to that tool?
No.
You have to be licensed.
You have to be a licensed mortgage broker and you have to be signed up with all these lenders because the lenders also need to send the rate sheet to you, right? So you have to be signed up, and that's what the mortgage brokers do.
Okay.
That's
kind
why
of confidential information, like not accessible to everyone.
Yeah, it's like we are the authorized dealers for it. Since we are authorized dealers for the lending institution, we get the rates and we get to see what they are.
Wow. So how do you generally pick like the best offer? What are some of the elements of the best offer in your mind?
Like how Anne said, the lending institution with the good reputation that they can close on time is like top of the list for purchase. For refinances you have some time cushion. So then you go with financial institutions which are not on top of their game with the speed, right? And then you look at the cost and you just strike a balance. Again, it's just like picking a spouse, right? There could be like 3 or 4 women that you can go with. You have to pick with somebody. Sometimes, like, even though that lady is not the most beautiful, but you know she's going to stick with you during thick and thin, so you go with her. So it's like that. You have to just pick the right loan program, and it comes with experience.
And sometimes, depending on the market, different banks get reputations for not being able to close on time. Like I would have told you 5 years ago, stay away from some of the bigger banks because they were notorious for being difficult to reach on the phone and not closing on time. And some of the credit unions kind of have that reputation too. So you want somebody reliable that gets the job done too. And somebody like Kiran, who's really used to dealing with all these different people, knows who has the most reasonable deal for you, but also does their job very well. So both of those factors are important.
Yeah, I mean, typically depends on, if that person is on a job visa, or if they're on a W-2, or if they're self-employed, if their credit score is excellent, so then we send them to like premium lenders. Sometimes if they're self-employed with not as good of an income, but still they fall into the guidelines, then we go send them to the second tier lenders. Their rates might not be the best, but we have the high probability of getting it approved.
Okay, so when the buyer is in the market for buying the house, they should be telling that kind of like these things, like they are on a visa or what kind of job situation they
it's
are.
There on the application.
They need to.
Yeah, it's there on the application already.
Okay, all right. And one more thing, like it's another follow-up question based on what Anne said. So let's say the market is not doing like really good right now, and previous recession few banks might have closed right at that time, or in the like past recessions few banks and institutions might have closed. They might have filed for bankruptcy. How do you stay up to date on such things, and how do you stay clear of such problematic institutions when you are confirming the loans or getting the deals?
I never had a bank close. I just had them be
transferred away.
They transferred to another ownership. I've seen that happen, but I've never seen where somebody had a loan for a home and then they no longer have that lending institution.
Yeah.
So somebody else will buy out their interests, and you'll still, maybe your servicing will go to somebody else. Is that what
Correct.
you would see?
See, all the conventional real estate loans are backed by Fannie and Freddie. Fannie and Freddie are federal institutions. They back, all of these are like backed by securities. So all these loans are protected. I mean, consumers are protected for a residential mortgage. So you don't have to worry about it. Like Countrywide was like one of the biggest lenders, and then they went under, then all their loans went to Bank of America. So the servicers changed. So if something happens to the credit union or if it sinks, then the government makes sure that some other servicer gets on it.
And you know, everybody likes to bring up 2008 when we crashed last, but in reality, if we really look back in history, and I'm sure Kiran saw this, a lot of those people that short-saled homes and had difficulties, had they just held on to their home and rented it out, they would today have half of it paid off and done just fine. So not everyone needed to short sell their homes. They could have moved and rented it for their mortgage payments. And I mean, when you look back in time, you really see that quite a few people could have probably just held on. It's not like they moved out of their house and went and rented a home for less money. They didn't. Rent was just as high as what their mortgage payment was when they were short selling.
Wow. So like the reason they panicked was they were thinking it will go too low and it will be very difficult for it to come back. So they were short selling it.
Yeah, home buying is a long-term investment.
Yes.
You're not buying it to hold it for 3 years typically. You're buying it to hold for a lifetime, you know.
For a lifetime. I like it.
Yeah.
That's a good quote, Anne. Buy real estate for a lifetime.
Yeah, so not just financial backup, you need to have a lot of patience also when you're buying.
Mm-hmm.
So